was expecting a really good football game this afternoon, and pretty hard to play an NFL game without a quarterback.
Say what you want. It doesn't matter. I put a little poll out there, to see what Tasty Nation, thought about your call. You wanted the underdog, and you know what? They faded you. They faded you 60-40. Sold to you, Johnny. Thankfully, everybody didn't follow yours. I like the two dogs scenario.
Who did you like?
Well, I don't know. Now it's past tense. It doesn't matter. I loved Philly. Loved the lock of the century. Are you
Let me tell you something. Nobody loves Philly.
I thought Philly was going to win. I thought it'd be a close game, but obviously it's not. You're right. You can't win without your quarterback. But I like to see Cincinnati win. I think I'd like to see Cincinnati win, but I think everybody wants to see Cincinnati win.
So
I think Joe Burrow is very likable.
I was talking to one of my buddies this morning, Jim, who he's a huge Philly fan, and he lives in Philadelphia. He's a huge Eagles fan, and it was like 10 o'clock in the morning. He's got like season tickets for 30 years, whatever. And so I go.
His wife said he couldn't go.
No. Are you kidding? There's no wife, no Philadelphia wife is telling her husband they can't go to a championship game. That's like it doesn't even matter. You don't even care about your relationship. But anyway, so he's on the phone. So it was literally 10 o'clock this morning, and he goes, "I gotta go." I go, "What's up?" He goes, because he was in a rush. He goes, "I got to get the face paint on." He goes, "I got to get my uniform."
No. He's not one of those guys.
Like, "I got to get the uniform on." I go, "What do you mean the uniform?" He goes, "Yeah, it's a lot of work. I got to get to the stadium. The game's not for another."
He thinks he's playing.
Person. What?
He thinks he's playing.
No. He's like, I got to go now. I'm like, it's 10 in the morning. He's like, "I got to go." I go, the game's at 3:00 Eastern time. He's like, "I gotta go. I can't talk. I gotta go. I gotta be there. Tailgate, whatever they're doing. Who knows?" He's like, "I gotta go." I'm like, "All right, I understand."
Well, good.
I told him, just before I hung up, I said, just so you know, I hate Philly.
Yeah. Well, they're gonna the easy game here. So, an easy game in the market on Friday, Sadnov.
Not for me.
I'm not for myself either.
Not for me. It wasn't. I did not find it easy. I did not like the volatility pump in Tesla.
Bitcoin trade up to 26,000. Bitcoin Cash. Did you trade it at all?
No.
I don't know if that's
I don't know if it's a real print. I saw it at 23 and change.
It's 23.7 now. Yeah. No, I just didn't see it trade up to 26.
Yeah, I got my two worst stocks on Friday were Coinbase and Tesla. And the crazy thing is I've been bullish in Coinbase and bullish in Tesla, and they got away from me in that move on Friday.
Yeah, same thing with me too. Too far, too fast.
Yeah, too far.
Yeah. And don't get me started on Wayfair either. I mean, up 65% in 4 days. I mean, I can't handle that
down in there, but my position's small. Thank God I don't really listen to you. I just partially hear a little tiny bit.
Thank God.
Yeah. So what are they looking like this morning? It looks
down
like
around 7 on the E-mini S&Ps.
Yeah, I thought they on the close, didn't they kind of
they goosed them a little? Well, they sold off.
They goosed them and they sold off, right? Yeah, exactly. Yeah.
There we are. We opened down 8, NASDAQ down 12, Russell down 5, and Dow down 58. Bonds up 13. I'm sorry, volatility up 13 cents. Bonds up 3. Oil up small, wrapped around 80 at 79.98.
Yeah, I was a little bit mad on the close, and so I sold some NASDAQ futures.
That's all right now. And then you got net gas down another 5%, 15 cents.
Net gas, I don't even know what to say. Yeah, I'm going to try to buy in my
NASDAQ futures?
Yeah. I just felt, that was easy. I got 20 points out of them. I just felt like they were.
Oh, you're back, Daddy.
That was a lucky 20 points because now it would only been 10. Make sure I'm flat. Yeah, I am. Well, that was a really lucky buy. I felt like they goosed them a little too much on the close, and I don't know, but
Nah, you were just angry.
yeah, probably it's just a stupid angry trade that actually worked. Usually those trades don't work, but I'm going to sell them again if they go.
Oh, they're unchanged right now. Now they're down 3.
Yeah, if they get them up on the day, we're going to let a couple of them out again. Haven't done a lot of trading at at night, but we'll see.
You're more a morning person.
Yeah, I'm more of a morning person.
Like 4 o'clock in the morning, 5 o'clock in the morning. Sure.
Yeah, but if they get them up tonight a little bit, I don't really have that. I don't really have that many deltas tonight at all. It was more of it was really more of just like an angry trade with some of the stocks that got a little. I thought towards the end of the week at that 4,100 level that we got a little frothy. Short term. I'm not bearish. I just thought we got frothy for very short term.
Well, I thought that for the last 2 days, but it didn't work out at all.
Yeah. And I was probably most surprised by the volumes on Friday. That's the reason I thought that, because there was, it felt like, I haven't looked at anything to confirm it, but it felt like it was one of the busiest call buying days that I've seen in a really long time. So a lot of these stocks that have been beaten up for a long time, people just came out of the woodwork to buy calls. And I think they got
volatility went up in some of them. Like you mentioned Tesla.
Oh, yeah.
Coin.
For sure.
Yeah, it went up well.
Yeah, for sure. So I think it was just, it just got frothy to me. So we'll see what happens from here. I mean, I wouldn't expect too much this week. I wouldn't expect anything but a little bit more of the same. I think they're just going to have a hard time at that 4,100 level.
Oh, I hope you're right. Well, they're right now 40.78 with 20 handles away.
Yeah, exactly. And that was kind of it. It was kind of a weird last call on Friday because we had all those kids in the studio. So I was like, it was fun.
Notre Dame alum, right?
No, not alum.
I mean students, but yeah. Sure.
Yeah, that was fun.
Yeah.
So anyway, that was it. But over the weekend, there's not, I mean, like we've gone from, it's the end of the world as we know it to now the number one, like I can tell by all the emails I get, like, how do I protect the downside? What happens if they crash? All that kind of stuff that we were getting a couple months ago to now the email is, I can't find anything to trade.
Right.
The number one email of last week was, what are you trading? What can you find to trade? I can't find anything to trade.
Right. You can't find anything to trade with high IV. Yeah,
I just can't find anything to trade, and I don't want to chase. I don't want to chase this stock. I mean, it's been a while since we've gotten a lot of emails talking about getting run over to the upside.
Mm-hmm.
But I think Tesla caused a little bit of pain on Friday for more than just me. I think for some other people too. But I don't know.
All the EV stocks, right? All the EV stocks had a good day.
Yeah, well, I don't have any other EV stocks. I wish I'd bought some other.
Well, I didn't know this show was just about you, Tom. I thought it was about the market. So
it's just about me, Tony. It's just about me. But if you want to talk about a sector that hasn't participated in anything, because I'm sitting here looking at all the cheap garbage that I have, and I mean EV stocks, aside, we don't really have a lot of those. But the cannabis sector hasn't had an uptick in like 3 years.
Oh, at least 3 years seems like it. Yeah. What's still right? $2 and change?
I don't know. I haven't looked. I have a position, but
sorry, it's $3.20. Yeah.
So that's one sector that that really hasn't moved. And what's weird too? What's also weird is like all the Bitcoin miners that I thought would really explode. Bitcoin got back to like 22, 23, 24, 25,000 in that range. They just haven't gone anywhere. Like,
Mara went up. I didn't think it would ever get down to $3. It's back to $8. I mean,
yeah, right.
That's kind of where it fell from grace. The last time was around $10.
I thought they'd be higher. Yeah,
I agree with you.
Yeah, I thought they'd be higher. Anyway, other than that, I don't know if you rolled on Friday. I got about half my rolls done before I ran out of time. I was having a harder. I had
less positions than you, and I was able to roll. And I've actually been rolling earlier in the week too. So I've been trying to stay on top of it just because of the one-way move.
Well, I'll tell you what I found on Friday, which was weird. Into the last couple of rolls where we've had higher volatility, the rolls were a lot easier.
Mm-hmm.
And I felt like it was a little bit harder to get the fills I wanted to get on Friday into that up move than it was when we were rolling into down moves. We're rolling to down moves. I was getting filled really easy and with good prices. I was reaching a little bit more on Friday. I didn't like it, so I'm going to wait till tomorrow.
Sure. And by good prices, you just mean mid-price.
Yeah, right.
Okay.
Right. Just something around,
Yeah,
something.
you didn't have to move it 3-4 cents to get filled.
Right. I had a lot of working orders, so I was kind of waiting. All right. Well, we're gonna break it up tonight. We've got John, we've got Pete, we've got Ilion, Tap, and we're gonna go through the whole crew. Hey, one quick question for you.
Yeah.
On the Super Bowl night.
You want to know how Vinny did on his birthday? He won 2-1, and he got a penalty for tripping and roughing, which was kind of nice.
He took that little girl down.
He took her down good, Saz. There was no stopping him. He was headhunting her. He
tripped her and then he jumped on her.
Yeah,
I don't like that.
Yep. They won 2-1. His friends came with signs. It was very cool.
I missed it. Sorry, I was at the casino losing my money.
Oh yeah, how did you do at the casino? Did you last the night? Let me say, 11 o'clock.
10:30.
I gave you too much credit. I knew it.
10:30.
Did you walk home with like a one-eared elephant with your pocket turned inside out? You had no more money?
No, I had plenty of money. I walked out on my own terms. When I went all in with a hand I couldn't win just so I could leave. Otherwise, I would have had to. I would embarrass myself in front of Jules and Steve.
Well, that's good.
No, we had fun. We had a nice dinner. We had fun, and
I couldn't make it. Thank you, guys. Appreciate the offer, though.
I lasted 4 hours. That's as good as I can last.
4 hours is good.
At Rivers Casino with one buy-in. It was fun. No complaints. It was all fun.
Sweet. You were
I'm getting filled now on my NASDAQ futures. Covered them 27 handles.
Back out. NASDAQ
covered them 27 handles lower. Now we're letting them go back out here.
I got you.
We'll see.
You were going to ask about the Super Bowl? What we were saying?
Oh, I just wanted to make sure we were. Oh, Phil, nice. I wanted to make sure we were broadcasting. Are we broadcasting the Super Bowl or not?
Are we broadcasting? Like, am I going to be in the booth with the announcers? No, I'm not going to be in the booth with the announcers.
Okay. Hey, let's do it. Let's bring on Pete Moman.
All right, Pete, what's up, my man?
Gentlemen, great to see you.
Welcome to the show.
Yeah, thanks so much.
You're welcome.
Hello, Pete.
Guys, hey, interesting end of the week. Absolutely. Seen stuff, it's interesting. Crude's up 65 cents. Natural gas, another 6 cents. I mean,
natural gas is in crash mode, but
yeah, it really is. So,
but I just found out I need gas to run my shawarma machine. So I think I'm going to buy some gas this week because I'm sure the prices are going to go back up.
You need propane, not gas.
It sounded good. Don't ruin the story, Tony.
It's a flavor. It's like chocolate versus vanilla. It's a kind of gas.
What are you doing, Pete? Are you just getting back from the Australian Open? You're all in tennis white. What's going on there? Is this?
No, it's just.
You're looking beautiful. You're
summer, Pete. What's going on?
I've got to compete. I've got to maintain a certain look, and you guys
you
set
have
the
white
bar.
Pants and white. If you have white pants and white shoes on, we're quitting.
With the white belt.
Yeah, I picked up cricket over the weekend, so this is a suit pretty much.
It looks a little. I mean, I'm not going to lie. It looks a little like you just came from a polo tournament up in over in Connecticut or something.
I like it.
Thank you, Tony. I appreciate. There's a supportive friend looking out for. It's probably the overlighting I turned on tonight is hitting the. It's actually a brown sweater that's a little overlit, but I'm working on it, so a little bit different look. Yes,
I like it.
Thanks so much. So,
all right,
guys,
so let's talk commodities, because here's the issue for me. I have on the fewest number of commodity option positions that I've had on in almost 3 years.
I bet.
And it's all based on volatility.
Yeah.
And when I go through the list, and bonds kind of just got under that 20 number last week too. So, I mean, I'm really reaching here for liquid futures options that have some volatility on it. Bonds are down in the single digits. I'm going to have to probably close my position in there tomorrow morning. Notes were still over 20 last time I looked. I haven't checked.
16.
Oh, so they're under 20. I mean, we still have the euro. We have the euro, the yen, and now that we've lost bonds and notes, we have the euro, yen, and soybeans. Am I missing something else?
Oh, no, you're not. And you're absolutely right. It is tough finding stuff right now. This week, we've got an FOMC announcement, a Bank of England announcement, and a European Central Bank announcement. So I think the ECB announcement, which has a little bit of question as to what they're going to do and how aggressive they're going to be, is keeping that euro vol kind of pumped into it a little bit. You're seeing it in yen too, a little bit stick in, but
sure, that's entirely possible. But you're not seeing it
No.
We haven't had a bond Fed announcement with volatility this low.
No.
In at least the last 52 weeks. That's for sure.
Absolutely. But I think the probabilities around it being 25 basis points is almost 100%. So that's kind of baked in. And, the question is, are they at this terminal rate at 4 3/4 to 5%? And they're just sitting. So I think it's going to be tough to see vol come back into bonds right now unless we get to a different price level, unless we challenge those highs of 132 in ZB or we get back below 127. And that probably is headline inflation driven, if not anything else. So it's going to be a tougher challenge there for volatility plays in bonds right now. I think you've got to stick with,
Can I paint the other scenario, which is, I think, more likely at this point? So if you are like me and you believe,
which Pete, which means you're wrong. So go ahead, Tom.
No, I'm not saying at all. If you're like me, Pete, and you think that the market is very forward looking, because that's how I believe markets are. They're always forward looking. And if you look at what's happened to the stock market recently, and and listen, we're 4,100, no matter how you slice it up. And that's a huge rally off the bottom. The bonds are still kind of, they're 130, but whatever. I would say that the likelihood of a Fed surprise that pushes equities higher this week, if there's any kind of outlier move based on everything that the market's been telling us, I don't see how it's anything but an upside surprise. And I'm not like a bull here. I think we're frothy and I think we're overpriced and I'm not long. But I think if there is an outlier move coming based on what we've seen in the stock market, what we've seen on a few stocks that have been beaten up, and what we see on people's, kind of willingness to jump back in kind of with both hands, and given like everything that's on the sidelines, and given the fact that the Fed may have just skated. I mean, they may have just skated.
You jump with both your hands, Pete?
Oh.
Do you jump in with both your hands?
No, I don't think you jump in at all, Tony, but I just think that you can be careful on your shorts.
You jump in with your feet. If people jump in with both their feet, they don't jump in with both their hands.
What do you mean? How do you dive?
That's a dive, not a jump, my friend.
No, when you
jump in, you jump in with both your feet. Yeah, your hands, your nose, your penis.
I
think comes with you, but you jump in.
I think they jump in with one hand.
When you jump in, you're going to be pushed in. You're going to be pushed in. You go hands first.
Okay.
Or you jump in and use one hand holding yourself quite out. Tom, I honestly think the other way around. I think that.
Okay, well, that's good. That's what makes the market.
Yeah, I honestly think that. You know what? I think this equity move is already being priced into upside bonds with us holding on to 130, that they are going to, and again, who knows what the hell they're going to say and what. I mean, even if we had the script in front of us, it would do us no good in terms of trading. I think that they've already built in with this equity move that they're going to take add pause language. In other words, you're going to move from moving rates higher to waiting to see. Now, if you heard that, you would think that should be bond bullish. The fact that they're not going to be hiking more, I think that's already been built in there. If they don't come out and have that language, if they continue with the we're going to be aggressive until we see results, I honestly think. I think we both think the risk is to eventually to back down to the downside below 130. But I think the surprise, if anything, is they're going to be a little bit more aggressive in their wording on Wednesday, and we're going to see the bonds react to the downside a little bit.
That's going to be fun to see because I think we're on different sides.
Yeah.
And
this is going to be an interesting week too.
It is, but we're not going to. But the positions we're going to have on are going to be much smaller than usual.
I know.
So it's going to be interesting because we'll be able to watch. I'm not saying we're watching from the sidelines because we're clearly going to be all in. I think this week you have Apple, Google,
Amazon. Is it Amazon?
Amazon, a bunch of other stocks with earnings. So I think there's going to be plenty of stuff in play. But usually I like having a bond position on, and with the IB rank at 6, I don't know what I can do.
No,
it's all direction.
It is all direction. And even within that, Tony, the one thing for direction for me too is I keep waiting. I'm looking at the yield curve inversion, which still sits pretty fat at 2s, 10s, or at 75 basis. I think we're at 75 basis points still. And I would have expected that if we would have seen that yield curve inversion start to change a little bit before the underlying market moved, and it really hasn't. Where are we?
With the upward move that we had, right?
Right, 70 basis points into that 210s inversion. I would have thought some of that would have come out, and while the underlying has moved, I mean, we've traded between 128 and 132 of bonds. The inversion piece hasn't changed at all. It's just stuck right there. Mm-hmm. So I'm waiting, trying to, before I get too directional on the future side, is looking to see if we get a change in that. And it seems like you would think the yield curve inversion would be when markets look ahead, they would look ahead to that part the quickest, the fastest, and it doesn't seem like they are. So I'm a little surprised that we're seeing that be as flat as it is going through this. I would have thought that if we're reaching that terminal rate and they're going to be a little bit more dovish in their talk, like you're thinking, we would have seen that soften up a little bit, and it hasn't at all.
That's fair. That's fair. I still, by the way, I still have the yield curve on. I've had it on since October, and we're in the
Since you screwed them over and got them into it in October.
Yeah. What is that? 2s, 10s, 2s. We have the tut spread on. Is that 10s under 2s or 2s under 10s?
2s over 10s.
No, 2s under 10s, right?
2s under 10s. Excuse me. Yes.
2s under 10s. Yeah. We got that on. So we got that going for us.
Yeah, well, that becomes a long-term core position, as we like to say. So, the 70 basis points, I think, is further, faster, and longer than any of us had imagined. But that's definitely a challenge. For me, I think probably some of the biggest moves we're going to see out of this week is going to be on the FX side. They've really, last week was probably the slowest week in FX that we've had in a long time. A lot of back and forth, 100-point days, 100 pip days in euros, 150 pip days in sterling. Net, we're right back to where we were, though. 109 in euro, 124 in sterling. Yen, able to hold on to a little bit of its rally. Aussie and Canada. The commodity side of it, Aussie actually getting a little bit of benefit from that. You're looking at copper trading above 425 again, which actually makes copper a little bit interesting, up at the higher end of its range. Not great options markets in copper. That's one thing I just wish we could get some good copper options markets to be able to trade. Different base metal, very different trading story than gold and silver. Actually, a tangential China play in terms of you look at the Chinese currency, copper, things like FXI, correlation is all incredibly high. Interesting trades if we could have a vol trade in copper, which is a little bit challenging right now. But I don't know. I'm going to be watching the currencies. That's probably going to be my greatest focus to see what what comes off here. And it's interesting, they gave away $2.50, almost $3 in that last 3 hours in crude on Friday. We're up almost 70 cents in crude. I don't know. Any thoughts from a vol standpoint at 2%?
No, there's not.
We're right there.
We haven't traded crude since early December. It's just been, there hasn't been much there. I mean, no, just because there's no
tight range though, right? Just under
tight range, no vol. Yeah, it's been tough.
So
hey, Pete, we got to let you go. We got to stay on track tonight.
You bet, guys. Have a great night. Good to see y'all.
Thanks, Pete. Appreciate it. Well, we got John waiting. You don't want to keep him waiting. John from Australia. What's up, my man?
Boys,
how are we?
You didn't comment on the scalp.
Great scalp, Tom. You cut Pete off. I was about to say it was an amazing scalp. You scaredy cat. You brought him right back. A couple of ticks.
Hey, just a trade, okay? Just a trade. There's nothing else going on tonight. Okay, I'm trying to stay here. Trying to impress the kids.
What
John.
can't you do?
well,
What's
boys,
up, John?
Australia's back open for business. We've had our Christmas season. We just had our Australia Day public holiday last week, and it's all full steam ahead now. And going into a bit of an interesting week this week. There's a lot of announcements, as we all know. Interesting to see what happens, because what happens in the US affects everyone. And so we're all watching.
Mm-hmm.
Yeah, well, we were mesmerized by the Australian Open, so we haven't.
If I didn't mention that before the show started, you wouldn't have a clue. An absolute no idea. Okay, who are the two players playing for the championship?
Oh, well, of course it was.
Maybe stop Googling. I know how this works.
I just watched the women's finals. I can't remember who won the men's.
Oh, okay.
We didn't watch it.
It was a good game by Novak. He came in, played strong, and there was a little bit of politics, because if you might remember, I think it was last year, he wasn't allowed in Australia because he didn't want to get vaccinated. So,
yeah.
But no, all is good. You know what? It's interesting season. The ASX, we're actually not too far away from our all-time highs.
Yeah, you're not, are you?
Yeah, so it's really close, and which I find very interesting. And so obviously we're really enjoying, the main drivers around market is obviously our materials, in our commodity sector, and that's really propelling a lot of opportunity there. The Australian dollar, it's holding around just over 70 cents, which is also good. I think. Last week when some of our numbers came out here locally, we saw the Aussie dollar just gap up about 0.5 cent on the back at our Reserve Bank of Australia is looking to do more interest rate rises, and because it's looking like you guys are almost there with the Fed raising your interest rates. Would it be fair to say you'd be almost there?
I think we're there. It's funny. I didn't realize
done raising rates after this.
Yeah, I didn't realize when we bought that one time when they were crushing like EWA in the Australian market. We bought EWA, sold FXI. That was kind of like a trade that we sold.
That'd be a weird trade.
I think it was FXI. We bought EWA, sold FXI, and I can't believe how much EWA's rallied off the bottom. I mean, it's what a huge move. Tony, if you bring it up.
I'm bringing it up right now. Yeah, I hadn't realized it at all. EWA came down from 22 to 25 without a downtick the last couple of weeks.
Yeah. It's almost. Like John said, it's a lot of it's the rally in some of the, only gold a little bit, because silver hasn't rallied at all.
It's also, look, our iron ore, coal, and other, some of our resources.
Yeah. We don't trade those things here, so it's kind of hard to, hard to get
You can get exposure through BHP. BHP will give you some exposure. It's traded on the US market.
Mm-hmm. Yeah. Does that trade a lot? I mean, we don't. What is BHP again? That's what stock is that?
It's a mining stock.
Yeah, I know. Which one is it? It's just called BHP.
BHP.
Oh, okay. No, we don't trade that at all. I should take a look.
That would give you a little bit of exposure to some of the mining sectors here.
Yeah, well, with an IV rank of 1, it makes sense. But my God, that stock looks just like Australia. You're right.
Yeah, it's the same. Yeah, it does. Yeah,
it's almost a mirror image of the Aussie market.
Mm-hmm.
So look, things are obviously we're very interested to watch how China manages their reopening. Obviously, that's not going to be a quick process, but obviously you've got. I mean, what you just mentioned with FXI, there's been a good run of FXI of late. It's just gone from some quite lows to it's sitting nice now. Are you still looking for bullish plays on China?
Not really. We're kind of flat China right now. We're a little tiny bit long FXI, and the rest of China we're kind of flat just because low IV rank. But I think it's interesting to watch the Chinese saga because what China did in hindsight now, because I think everybody can see this, they shot themselves in the foot.
They messed with Mother Nature.
Yeah, they messed with Mother Nature. They shot themselves in the foot. They tried to do something that they weren't capable of doing. And it took them 2 years to figure out their mistakes. And now they realize that when they just let markets be markets, actually the system works. And it was almost like a social experiment. I mean, I hate to talk about it like this, but it really was like they Frankensteined up a social experiment and they completely botched it. And they almost took their economy, completely down. And they might have just saved, hanging on by a thread, they might have saved everything and now they can turn it around by just letting free markets take over again. But I think it's a valuable lesson for the rest of the world. And I think that whole isolationist thing, I think you got a really good taste of how dangerous it is. And I don't know. I mean, from my perspective, they're probably safe again to get back in the water and to, whatever for probably the next decade. But valuable lesson learned on a really weird timing for China, and a huge, they probably set them back a decade or two as far as, being a global champion.
Well, I mean, look, as you know, if someone in an apartment building in China got COVID, you pretty much were confined to your building. Like, it was pretty wild restrictions. I mean, we had here in Australia some pretty wild things going on that, but that obviously China's next level.
They made you look like child's play.
They made us look like idiots. But don't start me on politicians. That's a whole nother conversation.
Oh, thank God we're not going there, John.
Yeah, totally. So nat gas. There's got to be a bottom soon. How cheap?
Why? Don't you remember a couple of years ago, Tony and I started talking about nat gas when it broke below $3. When it got to like $1, we're like, oh, it's got to be a bottom soon.
Yeah.
I mean, I'm a little long myself, but I mean, I wouldn't be so sure that, other than a short-term spike, you're going to see much.
You would think, though, with gas being in such demand, I mean, gas prices here locally are going through the roof. Gas has obviously formed such a strong part of Europe's, alternative power sources, et cetera, et cetera, et cetera. They're building, there's ships in numerous oceans holding gas for supply, et cetera. And I'm curious to know what's pushing it down.
It's an old saying, John, more sellers than buyers.
More aggressive sellers than buyers.
Way more aggressive sellers than buyers. Stop thinking like a fundamentalist or
here we go.
Stop reading the headlines, okay? The only thing you need to know about natural gas right now is no matter what, in spite of what anybody says, there's a lot of it out there and there's just a lot of it out there. Now, eventually what happens in moves like this is, I forgot what the number is. We used to have some buddies in the natural gas business, but I think after the last time it got down to $1, they all kind of shut their doors. But there is a number, like at least in the US, I don't know what it is, but it's like somewhere around $3 to something, where at that point, everybody kind of like, closes up shop.
Doesn't pay to take it out of the ground.
Yeah, it doesn't pay. And so at that point, you start to develop, huge demand. Eventually, you build up demand, and then eventually it takes off. I don't know what that number is, though. And I probably, based on the way natural gas is trading right now, oh boy, and everybody's long it. Everybody
it's probably the way it's trading. It's probably below that number.
Yeah, and everybody in the world's long it. I mean, every single trader I know has a little bit of long delta in natural gas. So I don't think it's going anywhere fast.
As long as it doesn't go too much lower, and I'm speaking my book here, it can go a little bit low, but not too much, and just for the next 25 days.
Me too. I thought my 2.5 puts were safe, okay, and my 265 puts were safe. They're not. So,
Well,
all right, John, we're going to let you go.
All right, boys, you take care. Have a good one.
Thanks,
All right.
John. Appreciate it. We're gonna go to Ilya. Ilya in California. Sorry about the 49ers.
It's okay. We still got the Warriors out there playing, so we'll see how that goes. They're not doing that great, though. I don't think this might not be our year.
Yeah,
No,
don't worry, it's not ours.
I don't think this is going to be your year for the Warriors. But you've had some bunch of good years, so you've had your share of good times.
Mm-hmm.
So Ilya, we're in that. We're searching for trades.
Oh, we've definitely had a good run.
No. I mean, yeah. Oil. Your basketball team, the Warriors, for sure have had a good run. But we're searching for trades right now. And we just talked to John about natural gas still has reasonably high volatility. I talked to Pete about the lack of, futures positions right now we have on just because of the really low volatility across the board. Is there an equity sector that's other than earnings right now? Is there an equity sector that you could point to that we should take a look at because, you could point to that we should take a look at because, I don't know, maybe there's something going on there where it gets kind of interesting. I'm talking about an equity sector. It could be, I don't care which one it is. Is there something out there that you're looking at that's interesting, blah, blah, blah?
So there's a nice ETF out there. It's a multi-sector ETF called IRBO. It's the artificial intelligence ETF. It basically tracks companies that do robotics and generative AI. I like it because I think we're in a world of deglobalization. I think we're going there over the next decades. And I think it's actually set up pretty nice now. It's rallied a little bit off the bottom there, 22, the low.
The options, it has rallied, but the options are untradeable.
Right, untradeable.
Yeah.
Right. So
this is a directional thing.
This is an underlying ETF. Like if you wanted to, what's really important to us is that it's got liquid derivatives. Like in this case, I've heard of this. I think Tony and I looked at it once when Vanetta brought it up one morning, but other than a pure ETF play, if you were like building some kind of a core position in robotics or something, it's not really it's not tasty material.
And then the other one I'm looking at, especially this week, is UUP. Which is the U.S. dollar. And that's, of course, I mean, we have the Fed this week, we have the ECB this week, we have the Bank of England this week. So there's a lot of stuff occurring that's dollar relevant. And so UUP is the other one. And that one, of course,
so
it's
UUP,
liquid all over.
UEP is interesting because, this is a stock that for the last 2 years prior to, this decline, it really hadn't had a downtick. And finally, when the dollar, we kept talking about the dollar being the most overbought of, I mean, Tony and I both thought the dollar was the most purest, most ridiculously overbought asset that was on anywhere. I hadn't seen anything like it for years. And as you can see here in UUP, it really was. There's two problems with UUP. One, it's a slow moving vehicle. Like it's like,
Yes.
Very low volatility.
Oh, it's got like a 50-cent move for a month,
Right. It's got a low volatility. It's a very slow moving vehicle. It's really good for people that want to trade the US dollar, that don't feel comfortable trading futures, and that want, an alternative to the futures market. Because
right.
Obviously the options trade and the underlying stock is very tradable, and you don't take very much risk. You can buy or sell 100, 500, 1,000 shares, and you barely make or lose any money, unless you get a giant move like we've seen recently. But it's still a hard stock to make or lose a lot of money on. The problem here is just that strategically, like Tony said, it's a 50-cent move. You're basically it's just a tough trade. One of the things we do is we search for liquidity first, and then we search for, some reasonable level of volatility. At least, when you trade like /6E, which is the same thing as this. At least there's enough leverage in the product that you can get some premium in the option markets, so it's tradable. So like /6E at least has markets where you can make or lose some money. You know, UUP is a tough one, but I agree with you that it's going to be an interesting week for the U.S. dollar. No, Pete feels the same thing. I think there's no question about it.
Absolutely. And actually, I think there might be a little interweek situation here where I think the market is really undervaluing how much vol is going to happen after this Fed announcement. And so I think then as you're going into the ECB and the BOE later in the week, there might be an opportunity there because I think there's some significant surprise risk there.
I agree with you as well. What happens in derivatives markets is, and you saw this all last year and you're seeing it already this year, is you'll start off with this situation where, you know, vol gets rich and it gets rich everywhere and it doesn't come in right away because everybody's shorted. And then you get a situation like we're in now where vol gets really cheap and it's cheap everywhere. So the risk now is that, you know, you got to be careful about selling cheap vol because you have the risk of some kind of an expansion. So I agree with you that there's a vol expansion risk, but the problem is volatility. The nature of volatility is that it clusters and you can't buy it. So you really can you can sit there and you can make your directional bet, but you can't be long vol because it can cluster for a year down here. So it's not a good long play, but you know, it's a tough, and it's an aggressive short here.
Absolutely. I mean, I certainly wouldn't be trying to short vol into the Fed. I think that's going to revert higher after the Fed into the ECB and the BOE, where the expectations are a little bit better anchored. And those outcomes might be essentially in line. They're pretty well priced in. You might get a little reversion back down. Markets might come down a bit, but obviously the Fed is the biggest story. If contract size is not a big limitation and you can swing some big numbers, then of course on the futures side where things are a little bit bigger, 6E, 6J, 6B, all of these are interesting opportunities, but those are pretty rich contracts. I know we have micros in the B and the E, but not the J.
Yeah, and the options don't trade in the micros there, so it's really hard.
Large bets.
Yeah, what I was going to say is actually, so my take on this is actually the opposite, which is it's so hard to sell vol here into these numbers this week, and it's so low. But I don't think you can buy it. I think you still have to be shorted. Like, I know that sounds crazy, but I don't think even though it has a lot more risk to the upside, I think you're going to get paid by being shorted, not by being long it. But it's a hard trade here. I hate it. And so that's the only way to protect yourself is to keep your size small, because I feel like that's, you know, again, I'm worrying about vol clustering, and I don't see anything turning around volatility in this market anytime, you know, in the very near term. I think the one thing that could move the markets this week, more so than the Fed or anything, is just some really interesting earnings. But again, I don't know if the risk is to the downside in there. I don't know. I don't think so.
No, I'm not sure. My sense is that a lot of last year was obviously spent stressing about what's the Fed going to do. Is it going to be 50? Is it going to be 75? Meeting to meeting, call to call. Powell spoke. He didn't speak. This guy spoke. That guy spoke. I think we're getting to a point as we get toward the end of the tightening cycle, clearly, and everybody's kind of started to bake that in. The Fed's kind of signaled it. The markets have baked that in. Yield curve hasn't really moved. The implied policy rates haven't really moved for like a month and a half. So I think we're getting to a point where after this meeting, if you get basically in line, then you might get a buy the rumor, sell the fact kind of thing, where people look at this and go, okay, well, the Fed did exactly what everybody thought. Good. What's the next object of speculation? Because that story might age out of speculative interest, essentially. And then the question becomes, well, okay, where's growth? And the growth numbers, yeah, okay, the GDP number was better, but that number is really lagged. If you look at the PMI numbers, they look awful. And so if you look at that, you might get to a point where you go, okay, well, Fed story is done. Where's the economy? Where are earnings and where's guidance? Risk off. And that's where you get your vol expansion.
Tony, give me the most outrageous call for the week.
Oh man, most outrageous call for the week. A V top, and we're back down at 3,800 by the end of the week.
No. I mean, seriously.
I mean, what do I think? I mean, I think we're going to have more of the same. What's stopping us? I think you can look at volatility, 1955. It's not percolating. If volatility doesn't pick up, I think the market continues its upward bias.
I mean, I think we've been on the side of vol getting under 20 for a long time. And I hate it when we're right, because it's a lot easier to trade when we're wrong. But that's really the story. What do you think, Ilya? Most outrageous call of the week?
Oh, I think by far the most outrageous is that we're going to blow through 42 because on ES, because people are going to go, oh, the Fed is done. Good. Let's everybody sing happy hymns to the Fed being over and move along. I don't think that's going to be the story at all. I think it's going to be risk off. I think people are going to start looking at growth and going, none of this is positive. The way that this inflation is coming down is only at the cost of growth. And if the Fed takes its foot off the market's neck for even just a little, it's coming right back up. I think inflation factors are structural. I don't think we're going back to a low inflation world and a real low rates world probably for a few decades.
Well, listen, in my opinion, nothing is worse than a low rates world and a low inflation world. Like, for growth, you want some inflation and some reasonable rates. I think it's way healthier, and I think the market's actually
agree,
probably healthier today than it's been in a long time. So we'll see. I mean, companies are lean. There's a lot of cash out there, and for the first time, like, I get really bearish when I feel like we're super frothy, and I don't feel like we're super frothy anymore. So, I mean, I'm much more mixed right now, but we'll see. All right, man. Thanks so much for everything tonight. Thanks for jumping on, Ilya, and we'll see you next Sunday.
My pleasure. Thank you.
Thank you, my man. Even the S&P's down 5 and change. NASDAQ down 14. Volatility basically unchanged, up small. We'll take a quick 90-second break. We'll come back tomorrow. Sound good?
Sound good to me.
Peace.